Good afternoon, this is Brad Dennis with BIS Commodities with your weekly afternoon roundup for June 1st. First, take a look at corn and where we are at for the week. Corn's down 15 cents. A lot of things factoring corn price right now. First off, we've got crop conditions. Saw those on Monday. They're supposed to be around 70. They came in at 79%, good to excellent. I don't put a whole lot of credit in this, but other people want to trade it, and so be it. It's a beauty contest that what looks fair to somebody else might look excellent to someone other. Anyways, it is something that the trade looks at, so you have to follow it to somewhat. Also, trade tariff talk. This came out over the weekend that tariffs were going back on in this on-again, off-again affair with China and trade tariffs. And actually, I would say more so with Mexico, is going to take some risk out of this market. Mexico is a big buyer of our corn, and if that should come up in the conversations with these tariff talks, with these NAFTA talks, we could see some further downside. Today we did take it down to 390 3/4 compared to where we were before, and that kind of met our Wednesday lows. In December corn we went down to 411. Wednesday's low was 410.5 there though, so there is support from end user buying underneath this market, and we will uncover that if there is more pressure to the downside. When you look at the balance sheet, and that'll come out this month, you'll see that there is a certain tightness for corn, and we do need to grow crop this year. Obviously, and a decent crop to fulfill all the demand that has been created over the past few years. On the weather side of things, short term, great weather. Longer term, not a lot of credibility in it, but heat and dryness will be coming in here. It'll be an ongoing story for weather as well. But right now, you're caught in the midst of a market that is going from tweet to tweet, from headline to headline, on what's actually happening with this trade tariffs, and that's the biggest influence right now. Yes, weather is coming in, and it's not ideal in the distant future, or excuse me, out in the future a little bit, but it's not enough to really offset the headline risks that we're seeing right now. Over in beans, once again, the beans were lower on the week as well. This weekend we have meetings with China, and we don't know if all of a sudden there's going to be an agreement with China and we come in 20 cents higher on Monday, or if there's going to be a disagreement and we go down and try to fill the gap on the charts. Right now we're just spinning our wheels between 1030 and 1040 basis, the Novembers. Now the interesting thing though, today we did get bean sales, and the ones that were reported, there were none to China, so they've kind of held back as far as the old crop beans, and also we didn't really meet the expectations on the meal sales too. You know, all throughout this whole being over $10 with beans and being up to 10.50 has all been about the demand for meal coming out of, you know, a poor crop in Argentina, and we've never seen that happen, or we haven't seen it to the certain extent now. We did get some crush numbers after the close. Those were in line with what people had estimated, so it should not have an effect on Monday's trade. Moving on to the livestock sector, same scenario. You know, last week you had high cash, 114, 113 trading in cash, and futures were at 104.65. Well, this week we traded 110 in Texas and Kansas later in the week, and we closed, I think, a dime higher on June cattle. So you're starting to see a little bit of convergence there, but it's about the cash coming back down, with boxes staying way up there, your choice is still at 28 or 228, and your select's down at 204. So they really haven't come off. So there's packers are making a lot of money right now on what they're able to buy cattle for, and we'll see the deeper we get into June, see if there's a little bit of convergence with the June contract to where cash is, or if cash sets back some. Most are estimating cash to be steady to firmer next week. In Iowa here, we were hearing 113s traded, so they have the money if they want to use it. So with the numbers that they're getting with right now too, everything's coming in a little bit lighter weight. They're chewing through a lot of numbers. There's still more numbers to go, so it could still get a little bit ugly out there. But that December-January timeframe, hopefully we've chewed through enough, and we might be able to see a nice little rebound in this livestock market, as long as demand holds up for us. Over in the pork, you go back to what we're talking about in corn and beans, tariffs, and you wonder how that's going to be affected. Mexico did mention pork products as one that they're retaliate against. So we saw a down day yesterday in pork. Today you saw it a little bit higher. You've got country price going up. You've got this headline risk coming back in here and hitting us down. And as of the end of the day, we were looking at, I believe, carcass was down $1.90 on 320 loads. So we're starting to come off on our prices there a little bit too. Stock market, non-farm payrolls came out today, and if you follow the president on Twitter, you probably knew about that yesterday. Thursday afternoon, there was a tweet about looking forward to the numbers out here, predicting that there'd be some good numbers, and we did see decent numbers. I think the biggest number, though, that we saw that I'd hold on to is that earnings number up 0.3%. Starting to get that wage number up there, and wage inflation is one that the Fed will really look at, and you could see that in bonds today. 10 years were down, dollar was firmer. So if we continue to see this wage earnings increase, that's the scenario we should expect. We should expect bond yields to go up, so bond prices are coming off, and we should expect the dollar to rally some. Earlier in the week, bonds really rallied, but that was kind of more of a flight to quality. Earlier in the week, everybody was talking about Italy and how Italy's going to go broke and take down the euro. We hear this story every 6 months, I think. So a little flight to quality. You saw the yen rally up, and you saw bonds rally up. As the week went on, though, we unwound those positions as people got more comfortable with the Italian situation. Not that it's anything good, but maybe they were led to think that the whole place won't fall apart. Crude oil down big this week. I think in the last 9 days we've taken $7 out of the crude oil market. OPEC and Russia, they're talking about increasing output. So, you know, with Iran, and we were talking about Iranian sanctions, and oh my gosh, we're not going to have that crude oil on the world market. Well, if OPEC and Russia step up, then we'll have those barrels flowing, and that supply will still be up there. The other interesting thing was that on our national supply, you did have an increase in both distillates and gasoline. I know there was a drawdown in crude, but to have the products increase, that's something we hadn't seen for quite some time. Getting back to the dollar didn't do any chart damage this week. Still looking for 95 at least on the dollar index. That would match 2017's high. So we'll see how that all comes about. If we can get away from all this tariff and trade talk and solidify some things that way, and then the only force is weather that we're trading, it'd be easier to kind of keep track of all what corn and beans are doing. But there's a lot of variables in the equation right now, and everything's kind of moving at different directions. So if you have any questions, feel free to give us a call here in the office, 1-800-373-2525 at BIS Commodities. This is Brad Dennis, signing off.